In this week's Stockscores Market Minutes, we'll discuss why good stocks don't always go straight up. We'll then do some market analysis, try and figure out if there's still a risk of a stock market correction. I'll do a market scan in search of opportunities and look at the trade of the week on ENDP. All right, good stocks don't always go straight up. What do I mean by that? There is a belief, I suppose, that if you are buying a good company, a good stock, that it should just go up and up and up. But the reality is, it doesn't work that way. In the early stages of an upward trend, investors will doubt the strength. They are maybe not aware of the new changes in fundamentals that drive buyer interest. And the reality is, not everyone gets access to the same information as others. What that means then is that in an upward trend, there are always going to be pullbacks. Now, these pullbacks will often shake out the uncommitted traders from their position. It's important to know the difference between a pullback and a trend reversal. We're going to look at some charts in a moment and I'll help you with this. But ultimately, we want to use pullbacks to buy, but we want to sell when the upward trends are broken. All right, so let's take a look at a couple of charts. First, we're going to look at a long-term daily chart. This of a stock that has done very well, Shopify. And you can see that there is a long-term upward trend. It actually got steeper along the way. But notice that in that upward trend, there was periods when the stock would pull back like that. And that little bit of weakness will sometimes make investors that are owning that stock nervous and cause them to sell. However, notice that the upward trend lines were never broken by those pullbacks. So what happens is the market runs up and away from the trend line and then comes back. Runs up and away from the trend line and comes back. And you want to use these pullbacks to be a buyer and not sell the stock unless the upward trend is actually broken. Now we can apply this to a short-term day trading chart as well. This is the 1-day, 2-minute chart of Snapchat, which was a stock that got picked up by my action candle indicator on Friday. And the actual entry signal was right here, the 1048 candle. And then we had along the way pullbacks and pullbacks and pullbacks, but the upward trend was always intact. And so, you run away from the trend, you come back, you run away, you come back, you run away, you come back. And what I like to do is look for these pullbacks to the trend line, and then when they start to move up again as an opportunity to buy. And that's actually a strategy I teach called an intraday pullback strategy. What's important to take from this is that don't expect the stocks you own to go straight up. Allow that they're going to go up and then they're going to come back a little bit. And as long as the upward trend line isn't broken, you should stick with the trade. All right, let's get into this week's market analysis and try and figure out if there's still a risk of a stock market correction. Starting us off is the US markets. We'll look at the S&P 500 on the 60-minute chart going back 30 days. And you can see that we had a breakout through that resistance level that we've talked about in recent weeks. We had optimism building. We know that because there was rising bottoms on the chart. We had resistance here. And on Thursday, we gapped up through that resistance on some optimism surrounding China-US trade talks. There is longer-term resistance there, and we're pretty close to that now. In fact, it's probably more like 303 if we went back a little farther, 303, 304 on the SPY. I do think we're headed toward that unless there is a negative headline, perhaps a tweet from Trump that causes a little bit of concern about those China-US trade talks. That's really the risk factor right now. I think the market wants to go higher, but there's some trepidation because what if there is some negative headline on trade? Now here is the longer term weekly chart, and you can see that we've got that resistance right about there. Call it 302 perhaps on the SPY. And we've got rising bottoms, which tell us that the buyers are in control. There's optimism. I think we're going to get up to that 302 and then get stuck. And then it's going to really require some real progress on trade to break out and move to new highs. For now, I think you remain bullish on the market, but with the recognition that on any occasion, we could get some negative headline and that could cause a little bit of selling pressure. So you want to have good risk management techniques in place. Looking at the Russell 2000, it's really not participating as it really hasn't been for some time. The small caps not getting too much attention from the buyers. It's not a terrible chart, it's just not showing any signs of life. We're stuck in this sideways range until we can break through resistance here. I wouldn't get too excited about the small caps. Moving along to the Canadian markets. Here is the chart, the 30-day, 60-minute chart of the TSX, Toronto Stock Exchange, and you can see that we've got rising bottoms there. We broke through that resistance level, and we're basically moving back toward the highs in the market. So there's a short-term bullish trend, but it's still somewhat cautious because we are stuck inside this sideways range that we've been in for a number of months. And I think, again, it's going to take something real significant, a catalyst, to break the market out. Most likely that would be a progress, some kind of progress on China-US trade. Right now it's just we're meeting sometime in October. It's fairly vague. Let's see how things shake out, but I wouldn't expect it to happen overnight. TSX Venture was in that downward trend. We broke it there. I thought maybe we were going to get a break up off this rising bottom. Never happened. And so we fell lower, hit new lows, but now we're making that little bit of a comeback, getting back into this range. So there's still some hope here. I wouldn't get too excited about it, but coming sort of October, November is typically the stronger season for these stocks. So perhaps we're just going through a basing process, and ultimately we'll build that strength as we go into the fall and early winter. On to currencies. US dollar opened strong this week, but closed below its open. That's why that's a red candle. This is a weekly chart. You can see the trend is up. The buyers are in control of the US dollar. I expect it to continue higher, but it may pull back along the way. As we learned in this week's lesson, often uptrends have pullbacks, and we should expect those to happen. Canadian dollar had an important move this week as the Canadian Central Bank had some sort of somewhat bullish comments for the Canadian dollar. You can see we broke the downward trend there. We pulled back. And now we made this break here, which is another rising bottom. And so we're slowly building optimism for the Canadian dollar. I think it's a slow process, but it does seem like the Canadian dollar has at least bottomed. Now it's a question of when will it start to trend higher. Big question there is the price of oil, which we'll talk about in a moment. And on oil, it matters whether China-US trade goes through, because that prevents a global recession, helps oil prices higher. All of these things interconnect, and you always have to think about that intermarket relationship between different instruments. On to interest rates. Of course, we've had this great run in bonds, a little bit as a hedge against market weakness, and you can see that the trend went somewhat parabolic, and I think it's overbought. I think the bond market is likely to pull back in the near term, which means interest rates would rise a little bit in the near term. Not really any sign of weakness yet, but of course, if the stock market continues to stabilize, continues to move up toward those all-time highs, I think money's going to come out of bonds into the stock market, and we'll see a little bit of a pullback in the price of bonds, which means a little bit of a rise in interest rates. And commodities. Let's talk about gold and oil. Of course, gold has been a hedge against market weakness, against very loose monetary policy by central banks as they try to offset a potential global recession. And that is what's driven gold higher. But this week, you can see that we hit a new high and closed below the open. That's called a bearish engulfing candle. You can see that the low is lower than the previous week and the high is higher than the previous week. And that's a reversal pattern. And I think that maybe we'll see a little bit more of a pullback in gold, assuming that the stock market continues to stabilize and move up toward the highs. Of course, if there is some negative news on China-US trade, then I think gold continues higher. So for now, I would just be a little bit cautious. I think we could see some profit taking near term for gold. The upward trend line hasn't been broken yet, but we should watch for that. And on to oil. Notice that in oil, we have what's called a bullish engulfing candle. The low on last week is lower than the previous week, and the high is higher than the previous week. And that's a sign that the buyers sort of took control through the week. In the start of the week, they were weak, and towards the end of the week, they started to accelerate with some strength. However, we still haven't broken this downward trend line, so don't get too excited. What's good, though, is that we're starting to build some rising bottoms. So perhaps oil will finally break this downward trend line that it has been in for some time. I say wait for that to happen, but you can start to watch those oil stocks to see if they start to move higher, as oil seems to be finding some buyers. And finally, the fear chart. Of course, with the market stabilizing in the last week, we can see that the VXX has dropped off and is starting to move back toward the lows again. And it's been a cycle that's been repeated a number of times. We get this jump up in fear, and then it falls off again. And that looks like what's happening. At any time, this could reverse if there's that negative headline. but for now it looks like fear is falling. So my ratings then: US stocks, neutral long-term, bullish short-term. Same for Canadian. Gold, I've lowered my ratings to neutral and neutral, both long and short-term. And oil, the same, neutral and neutral. Optimism about upcoming US-China trade discussions has brought the market up to near all-time highs. However, the potential for headline volatility remains, so we should still be cautious and use good risk management. Gold is showing signs of profit taking, while oil is starting to build buyer interest and fear is coming down. All right, let's do a Stockscores market scan now in search of opportunities. This week I'm going to run a scan called the Action Breaks strategy. In this particular scan, it looks for stocks that are having an abnormal day to the upside with abnormal volume against a downward trend. And it's often a good sign that a market is reversing or trying to bottom. And what I look for as I go through the charts is a stock that is actually breaking a downward trend line. So there are some on here. I'm going to show you, for example, this one, SELB, and I can plot the downward trend line like that. You can see we broke that on Friday. A little bit of spike in volume. I wish the volume was a little stronger, and it's had pretty good support at $1.60. I'd give that a 6 out of 10 as an opportunity. My main concern there is the lack of volume and a little bit with the overhead resistance for the stock. Here's one that we day traded on Friday. It was one of the day trades that really made a nice setup. We'll talk about that in just a moment. So ENDP has broken its downward trend line from a double bottom. You can see it bottomed here at $2 and again here. So there's some support at 2. Notice the stock is under accumulation. The volume is increasing over time, so that tells us that the buyers are starting to accumulate the stock. I like this chart. I'm going to give this one a 7 out of 10. Moving right along, just beauty of the market scan is you can go through thousands of stocks with the scanner, and then you only have to look at the select number that meet the criteria. In order to use the market scan, you have to be a member of Stockscores. You can go to the trader training area of the website and go to, where is it here, products and services. You can learn all about how to become a member of Stockscores. I won't go into that now. So this Pier 1 Imports, it's pretty good. It broke its downward trend line. It's been building some rising bottoms. My main concern is that it didn't close near the highs of the day on Friday, but really strong volume. I'd give this a 6.5 out of 10. When I give a number like that, really it's my estimation of the probability that the trade will work. So a 6.5 out of 10 is basically a 65% chance of working. Nothing is 100%. We're always sort of trying to play the probabilities when we do this stuff. Blackstone Minerals, you can see again the spike in volume. So buyer interest was strong, good price action, breaking that downward trend line from some rising bottoms. We'll run into resistance up here around 18 and a half, so there's enough upside to justify the risk. I like this one. It's got a very strong yield, 10.43%. I would question whether that can last. That's a very abnormal yield, and I wouldn't count on that being the case going forward, but still, healthy yield and a nice chart. I give this one a 7 out of 10 as well. And that's it. Let's jump back to the presentation and look at this week's day trade of the week, and it was on ENDP. Of course, with our day trades, we look for Stockscores action candles. I have a service called Active Live where you can watch my trading screen as it signals the action candles on any stock on the US market as we monitor thousands of stocks in real time. And this one made its action candle right there. For $100 of risk, that required a position of 1,110 shares because it's roughly a $3 stock. That was $3,200 in capital. Stocks under $3 are difficult to margin, so I don't assume any use of margin. That's why I've got not applicable there. Ultimately, the stock closed at a 6.8 RR, reward for risk, which meant a $680 profit for a $3,200 capital outlay, which was a 21.2% return on a one-day hold. That's a really nice trade and a really good setup from a flag pattern. You've got the move up, you've got the flag, and then you've got the action candle breaking from the flag, predicting that that stock had a 70% chance of going higher. All right, well, that has been the Stockscores Market Minutes for September 9th, 2019. Please click on the like button, leave a comment if you have one, most importantly, subscribe, and even more important, trade well.